Today we are going to look about the factors that affect your returns in debt funds. Financial expert Mr. Hariharan will explain this to you now. Hari, over to you.
Again, this will vary depending on what scheme you have selected and also what has happened historically in terms of interest rates. But just to give so the thumb rule is that typically, okay, I'm using the word typically vis-a-vis a savings account. If you are investing in putting your money in savings account, you come to a liquid money market kind of funds. You could expect, savings account plus 1 to 2% more. Again, I'm giving you general numbers. Things can vary depending on what the market situation at that point in time. But typically, this is what the numbers will look like, unless there are some very significant developments, like a COVID or something of that sort. Otherwise, this is the thumb rule. And from a FD perspective, again, FD, so depending on what scheme you select, typically with a short-term kind of funds, you can expect FD plus again 1.5, 2% kind of additional return. Please remember, most of the returns in debt will be single digit, but slightly on the towards the higher end of the single digit. Few cases and instances, specifically with a tactical kind of allocation, like I talked about guild funds, you could end up earning double-digit numbers in a short span of time, but those are tactical calls.
Thanks for your detailed explanation. Are you in search of a personal guide who can remove the stress of handling your finances? Then please feel free to avail our expert consultation. And also you can attend our webinars to gain investment related insights. Both the consultation and webinar are absolutely free and you can find the link in the below description. Please like and share and do subscribe to Holistic Investment.